MicroQuant. Later on tonight, we're also going to be joined by Jim Alswager, and he's another MicroQuant Live Trading Room specialist. Thank you very much for your patience. We were getting started a little bit late. Wanted to give people the opportunity to go ahead and join us. I know it's a little bit early for some of those on the West Coast, so I wanted to give everybody a chance to get home, get settled, and get ready to start. So I appreciate your patience. Thank you for that. Okay, let's go ahead and begin, and we'll talk about tonight's webinar, which is focused on how to identify trend lines. Basically tonight I'm going to go ahead and review the fundamentals of trend lines, talk about how they work, talk about how to draw them, and then how to trade them. Also, I'm going to throw in their just as important cousins, support and resistance levels. So let's go ahead and get started. Okay, if you think of any questions at all during my presentation, please go ahead and submit them via the GoToWebinar side menu. You can see it right there where you see the little arrow. The question shows right up on my screen, so I'd be more than happy to address any questions that may come up with. So go ahead and submit them, and we'll go ahead and try to answer all submitted questions in the question and answer segment at the end of the presentation. Occasionally I'll go ahead and answer questions in the individual sections also, but any questions that are remaining when we get to the end, I will go ahead and answer them in the question and answer segment. Okay, and we'll make sure that all questions are addressed before we leave for this evening, so feel free to go ahead and enter it at your convenience. Okay, 1 second here. There we go. Risk disclaimer. We at MicroQuant want you to know that trading or investing carries a high level of risk, and it is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. This content is subject to change at any time without notice and is provided for the sole purpose of education and assistance in making independent investment decisions. ValueCharts.com has taken reasonable measures to ensure the accuracy of this information contained herein. However, ValueCharts does not guarantee its accuracy and is not liable for any loss or damage which may result directly or indirectly from such content, or from an inability to access such information, or any delay in or failure of the transmission or the receipt of any instructions or notification in connection herewith. Any past performance results are shown for illustration and example only and are hypothetical, and as such have many inherent limitations. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. CFTC Rule 4.41. This is a U.S. government required disclaimer. The CFTC wants you to know that futures and options trading not only has large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options market. Do not trade with money you cannot afford to lose. This is neither a solicitation nor an offer to buy, sell futures, stocks, or options on the same. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. The past performance of any trading system or methodology is not necessarily indicative of future results. If you have any questions on either of these two disclaimers, feel free to go ahead and contact us at MicroQuant. Okay, let's go ahead and get started with the topic for tonight. How to identify support and resistance levels and trend lines. Actually, we're going to first get started with support and resistance levels first. Okay, so what is support or resistance? What does that mean? Basically, support and resistance are key price levels that have turned the market in the past. There's a history, a price history of price action at certain levels. At support and resistance, they can often make a market stop falling or stop rising. And they're great potential opportunities for low-risk trades. We use them all the time in the options live trading room that way. We'll first get started with a support level, and this is an example of a weekly chart of wheat. As you can see, let me get my pen here, you can see that prices are falling on this chart. Now, when prices fall, basically what that means that the sellers of a particular commodity have more strength than the buyers. Either they're more of them or they're more aggressive than the buyers. Anytime a stock is put up to someone wants to buy it, there are a lot of sellers that come in and try to take advantage of that, and that therefore they're stronger than the buyers at the time. So prices are dropping. Now as prices come down and approach this support level, what we're going to see that prices start to slow down because now the buyers are starting to come back in the market. And as the buyers come back in, prices slow down, and eventually buyers start to overpower the sellers. And then that pushes prices to a stop and then reverses the direction. Now here prices bounce off the support level, come back up, try again. Here sellers try to push the prices down, but the buyers meet that level of selling and then start to overpower it. And once the buying power now is stronger than the selling power, prices move up. And again, that is basically how a support level works. Now, oppositely, as prices are moving up, buyers, in this case, overpowering sellers, or there are more of them, up to the point of resistance. At this resistance level, sellers start to come in greater numbers or with greater aggressiveness and begin to sell the commodity. In this chart, it is soy. So you see, as sellers come in, it stops prices right at the resistance level. Prices come back, try again, hit that support level again. I'm sorry, this resistance level again, and then prices back off. For a third time, it comes back up, hits the resistance level a third time, and then, oh, actually it's a fourth time, just barely is able to get it close to resistance, and then from that point prices fall. Again, what happens is the sellers come in each time prices approach this resistance level, and then it just knocks the wind basically out of the price, and prices fall. Okay, so that in essence is the psychology behind support and resistance. Now, what happens at one of these levels if it's broken? So what's important is to know the most important concept here, that support and resistance are basically two sides of the same coin. In this case, prices are coming down, they bounce off support. They come up, they come back down, they bounce off the support. The third time, support cannot hold and prices break through. At this point, the opposite side of the coin becomes true. Now what was once support is now resistance. Now prices come down and then they turn back up and they go right to the same price level, which is now acting as resistance. Prices bounce off of it, come down, they go back up. They bounce off of it, come down, come back up. 3 times it's repulsed. For the 4th time, prices come down. Actually, it's 5. And they come back up. And then one more time, they come back down, and then they break through. Okay? Now, at this point, when prices are up here, now this has now become support again, where it was resistance. That's the crazy thing about support and resistance levels, is that they change their stripes, but the level itself doesn't seem to change. Okay? All right, let's go ahead and continue with this. All right, Now let me go ahead and first ask you, are there any questions on support and resistance? Okay, let me just take a quick look at the questions here. This session is being recorded. We just need to have some time to get it processed and back on the website. But usually the recordings are on the website from all of these past Tuesday webinars. How do you find resistance and support levels in the very first time? MB, that's a good question, and I think that will be best answered a little bit later when I go through some of the examples. You'll be able to see it, but usually support and resistance needs 2 points of reversal, whereas back here, you see, we can identify this line based on the stopping points in the trend of the price. Here, you can see it especially closely here. Let me get rid of my ink so you can see it. So at this point here, when prices come up to test, here again, excuse the fact that I'm having to write with my mouse here, but I'm trying to identify these points. So these 4 points, they're basically verifying that this is a good resistance level. And same thing on the opposite side as prices were coming down. But again, the question is, how do you identify it the first time? And that's a very good question. We'll look at the examples, and I think the illustration will be better. It's a better way to show you. Okay, but thank you very much for the question, Jim. When do I dismiss that? When do I dismiss that support and resistance lines are no longer valid? That's a very good question. What we'll see later on, and I'll point it out, that there are times that eventually these lines may seem a lot more porous than they are. See, they're very solid right here, but later on in the price history of it, as prices move forward, you can see that sometimes it becomes easier for these prices to move back and forth between support and resistance without having these stopping inflection points. But I mean, it does happen, and it doesn't always stop. Just like here, some other factors come into play depending on momentum, price momentum that we measure. But again, I think what we can better do is show you in the examples. But that was a good question, Keith. Thank you for that. Okay, so let's go ahead and continue, and that way I can get to those examples. So that is support and resistance levels. Next are, what are trend lines? You know, that seems like a pretty simple question, but it's actually unique. It's different from support and resistance. So basically, a trend line is a price level that's, again, caused a significant bounce in the past. The price has turned the market more than one time, that the market is showing weakness approaching this level. Now, weakness in this terminology is basically meaning price momentum tends to slow down. I like to tell my trading room that a trend line or a support and resistance level is like an intersection. Okay, and you're driving in a car. When you approach this, you slow down. And then you decide, do I go through the intersection, or do I turn around at the intersection and go back the way I was where I came from? And that's a good way to think of it. But in this particular, this particular example here, again, weakness is reflection of price momentum. And then how do you identify them? How do you find them? We'll talk about that also. This right here is a daily chart of Apple, one of the favorite trading stocks we use in the options live trading room. And again, daily chart. This goes back to early January, really. Now, what you see here, these are price support and resistance levels. They're horizontal, as you can see. A trend line is formed by the 2 inflection points at a minimum. And an inflection point is when prices are moving up in one direction, and in this case you can see it's quite strongly, and then prices come back down. The point at which prices stop and reverse, that's what I call an inflection point. You can see it. Usually it's very sharp like this. Prices come down, test these support and resistance levels, break through, and then they come back up. They come back up to this point right here. And it comes up, it stops, and it comes back down, making our second inflection point. These 2 points are 2 very good inflection points, mainly because of the steepness of the move right there. So you connect this point and this point with a trend line. Again, trend lines are defined as, again, a line created by 2 or more inflection points, and usually they're not horizontal. That's kind of what's unique about them. But you can see how the market sees this trend line as it comes down. Now here it's a little porous. It comes back through and comes back down. You say, well, Dave, it went through it. It didn't bounce off of it. It doesn't always have to bounce off. But I will actually zoom in and show you this section right here, from this point here to this point here on the next slide. Let me move forward there. Okay, so I've zoomed in. This is that same trend line on the daily chart. As you can see, prices came down. Again, this is nice support and resistance level. I want to show you that. But here, this is the trend line we're watching. Prices come through. They do pop up here at the open, on this open, high, low, closed bar. It opens here. You see it comes down. It tests that support level here. The trend line is acting like support. Prices bounce right off of that, come up. Prices the next day open here. Prices come all the way down to the low. The low just happens to stop right there on the trend line, and then prices move up and close right here. 3 days later, prices open up on the trend line, and then they bounce up and down, and they close right here on the trend line. The next day, prices open on the trend line and shoot up. And then here is one of the days that it goes back down. So you can say that the trend line is being respected by the prices. It may go through it. It may go back through it the opposite way. But you'll find there are a lot of interactions with the trend line. You can see right in this area. And you can see prices come down and then prices come back up on, this is, I think this was last week, but you see prices come up right here. They stop right on the trend line, and then they bounce back. Now, if you take into, I'm talking about trend line, this trend line right here for this slide right now, but I want to also bring to your attention, do you see what's happening at the support and resistance levels? This is a beautiful example of how a stock is trading with both trend lines and support and resistance levels. See, prices are right here. They come up, they stop here. Now this is what defines this trend line, but as prices come down, they break through this support level, they stop right here, they come back up. Point of inflection. Point of inflection can also be used to generate these horizontal support and resistance levels. Okay, lots of times intraday we use support and resistance levels on intraday points in the options live trading room for our intraday trades. But look how it comes down to here, and it just stops on this support level. Comes back up, opens right on support, breaks through. And one thing you'll also notice is how quickly this breaks through. This happened in one day. Once this support level is broken, it zips down right there. Now, I'm also going to be talking about how we traded, but since we have the slide up, I wanted to show you. Zips right down, and then it comes back up. Now, as prices come back up, what does it do? It tests the support level right there before it breaks through. The next day, it opens on support, and then it goes up. I think the best trading example for Apple right here is this day right here. Sorry. Be better to have a pen, don't you think? Right here, this bar, this three-colored bar, we open here, prices come down. I remember we're within 15 cents of the low. We're actually at 418.85. I remember the day, 418.85, and then we bounce straight up, and you can see right here, we stop right on that trend line, and we close right here. That is a $19 swing in Apple in one day, and it goes from trend line, it goes from support to resistance and back down. That is exactly why we look at trend lines. And then you can see that actually happened here too, this day. Opened here, came down, stopped right on support of this trend line, shot right back up, hit support on this trend line. Maybe I said that wrong. We opened here, came down to support, came right back up, hit the trend line, and it was resistance. So it's almost like when you're trading intraday, these are almost like stop signs in the middle of the chart. And as prices approach here, they slow down and then they reverse. Same thing here, they slow down and they reverse. So it's excellent to have good trend lines. They just provide very good points to trade against. In our options live trading room, we actually, in the middle of the week, towards the end of the week, we do a lot of credit spreads, and we actually refer to these support and resistance levels as lines of defense, because usually we'll write a spread and we'll be short on it here, and we want prices to stay below that level or maybe down here above that level, and we'll utilize where prices have stopped before on the trend lines or the support and resistance levels, so that it'll protect our short leg of our spread to the upside or to the downside. And it's very neat how that happens. So again, that's how we use them. We use them in intraday trading, like these examples here, but we also use them for writing credit spreads. Okay, let's go ahead and continue here. Okay, any questions on identifying trend lines? They are pretty straightforward. Basically, again, you're looking for those sharp, distinct points of inflection, and then we draw a line between the two. The one thing I want to stress is when you do, let me go ahead and back up here. When you do draw trend lines, you want to be exact as possible. Put it right on the end, and then zoom in if you have to, but make it exact as possible, because you don't want some funny looking trend line. You want a trend line, and you want it to be exactly like everybody else in the world draws it, because if everybody's looking at the same trend line, then more people will be looking to buy or sell right on the trend line. It's almost like a self-fulfilling prophecy, that if we believe that there's resistance there, we're going to trade like resistance is there. Therefore, resistance will be there because everybody's trading it like it is. Okay? More on that later, but that's one additional point I wanted to make. Okay. Let me just double check the questions here. How do you determine which time frames to draw? Good. Draw trend lines and support and resistance levels. Okay. That is really good question. I know, okay, the one thing about trend lines and support and resistances is just the fact that the longer term the chart, whether they be daily, weekly, monthly, when you have a monthly or a weekly turning point like this, it's very significant compared to something that's short term, whether it be a 15-minute chart, a 10-minute chart, a 5-minute chart. Those trend lines are much weaker. It's almost like the longer the term the trend, the longer the term the chart, the more seniority the trend lines and the support and resistance levels have. I will show some live examples later, and you'll see what I mean. But as a general rule of thumb, the longer the time frame, the more importance the points of inflections are, and the trend lines that are drawn on them. Okay, so if this was a 5-minute chart, that's still a valid trend line, but it doesn't hold as much weight as a daily. When we use it in the options live trading room, we look at weekly and daily trend lines, and then that's what we usually trade off of. 60-minute trend lines are there mainly for some intraday tradings, but what I'll usually do is something like this with a daily. I will take this and I will transpose it into a 60-minute chart. So like the point of inflection is still there because this is a high of the day, and right here also. So I'll find the bar that belongs to that, and I'll still draw that same trend line. You'll just say the the level of granularity is there. You'll see that on a 60-minute chart, but the point is still valid. So that's it. Now, someone's asking about, what about a really steep slope? Let me give you a good example of that. Would you, Keith, you know what? I'm going to hold off on that particular question because I'm going to show you some live charts, because a really steep slope is very important. If this point of inflection was here and the other point of inflection was here and it was really steep, that's still a valid trend line. But there's another type of slope like this. It's a little bit harder to call it a trend line. Like I said, it's really good if there's a really steep point on there. So again, let me hold off on that particular question, and that I think my example will be a little bit better. Okay, so now that we get to the right slide. Okay, thank you very much for your questions. Those are really good questions. So now we're going to get into trading support and resistance levels and trend lines. Okay, now bear with me. This is a little diagram on how to trade support and resistance, and this is a good example of how we do it in the futures room. In the options room, it's a little bit more complicated because of the way we trade, but the theory is basically the same. Again, trading support level. Prices come down, they bounce off support, they go back up. Prices turn someplace, maybe it's another resistance level, but they turn and they start to come back down. This is the point I want to talk about. Now it's coming down, and the most important concept to understand is that we assume prices are going to bounce off this support level. They have in the past. We will assume that this support level right here is valid and prices will turn up. That's an important concept because you don't want to necessarily have the doubt whether or not it's going to bounce. So with this specific trading setup, or the way to trade this, is once you get to a particular point that's very close to this support level, we will actually put a limit order in to become long one contract, one group of shares, like 100 shares of Apple, whatever, just whatever, one contract, okay? And then if things go right, we're now long, we hit that level, and then prices turn and continue back up. That's normally what happens. Now the question is, Dave, okay, that sounds great, but you know, 1 out of 3 times it'll break through, right? Well, I don't know what the percentage is, but just let's assume now we are long one contract. We got to that level, but this time prices break through. What happens? As prices break through, we hit this opposite side that we also have a limit order in which there are short 2 contracts. So we're long 1 from here, but as they go through, we become short 2. Now, why do we trade 2? Well, because the first of them cancels this out. Okay, we were long 1, now we sell 1. Now the other remaining 1 contract is for our position short, because now that we've broken through, this previous support level is now resistance, and now we assume this is going to run to the downside. Does that make sense? Again, just run through it one more time. As prices come down, we have this limit right here on the inside of the support level that we become long 1 contract. Prices turn up, and now we're long here, and prices turn up, and now we're at a profit. Now, if prices happen to continue through the support level, we have on the opposite side of this previously support level, now resistance, a limit order to short 2. The first one knocks out the first long contract, and now we are short 1 contract to the downside. And this price will go ahead and continue on down. That's normally how we trade a break in support. Again, the most important concept is you assume that the support level will hold. If it doesn't hold, you have provisions to get out of the long position and go short. Okay? Now, that's important because sometimes this happens right here. Okay, I'll just go ahead and pull this example down. I see that you can see it. Good. This is gold. Oops. That's what happens when you try to draw on a live chart. It doesn't work. So you can see here, this is a weekly on the left, daily on the right. Same time period is just zoomed in. So this level right here at 1541.39, right there, is valid because prices come down. They touched that level, bounced up. They came down, they hit that level, they bounced up. Do you see how those are nice points of inflection? Okay, now prices come down, they get close here, and they bounce up. Now this is showing you on the weekly. Okay, this area right here is the same area. I guess it's back here. It's a little bit further back, right in here. Okay, now this time, the last time they come up and they come right to that support level, you can see where it touches right here. Let me try to zoom in for you so you can see it. Pardon the jumpiness of it. Okay, they touch right there. That's the touch right here. Okay, prices come up and they finally break through. Now this happens all the time, especially in futures, but also happens in stocks. Once it breaks through support, this is what happens. It runs. So right here, as we're coming down, we put a limit here to go long. It bounces up and we're able to sell at a profit. Prices come down here. We're long one again, but this time it breaks through. So right on the opposite side, we go short two. So long one plus short two equals short one. And now we're short and prices just fall through the floor. Can you imagine being in this trade? This is on a one day here. I know some people in Thomas's live trading room were watching this. So that was a very profitable day. I mean, a couple of days actually. But we go from around 1540 down to 1324. I can't imagine. That's $200 in gold. Yeah, $200 in gold. So that right there is why we play trading support breaks, just like that. That's it. That was the prime example. That was a real life example of what we're trying to do here. Okay. Let me see here if anybody has any questions. 2000. Right. Because the reason why we do this is, in all honesty, we cover both bases. We assume that it's going to bounce and we make money. But if it doesn't bounce, we have especially if this is a well-established support level, if this has been touched as many times, can you imagine this? These are weekly points of inflection here and here and here and here. Okay, this is not you know, a 5-minute support level. This is a weekly. So this is a major support level. That's why it caused this bounce on that day. That's why it bounced right there. But when it broke through, it really ran, and it's doing it again. But that's why this technique works well. Okay, now on the opposite side of the coin, this is the same example, except we're trading resistance breaks. I don't have a live example of this. Gold is what's in my near-term memory, and I'm sure everybody's kind of familiar what's happened to gold in the past month. So this is the same thing. Prices move up, they hit resistance, they bounce back. Second time, as the prices go up, we assume that resistance will hold, and then we'll go short right before prices get to resistance. Okay, now we're short one. Okay, if it continues down, great. We're already short. We'll take profits in here. Okay, if it doesn't and it does break through, same thing. We're short one because of this limit here. Now it breaks through. We'll go ahead and the limit will be hit and we'll be long two. This will cancel out this, and then that way we're long one. It's kind of a neat way to trade. You got to be careful though, because sometimes it comes through, breaks, does all this stuff, and then comes back. It'll come back through it. So it's knocking out the stops, and that does happen. You have to be careful of this kind of motion because you can get chopped up a little bit. You can take little losses here and there. One trick that we do in the options live trading room is when prices are approaching the support level, this resistance level, and support on vice versa, is we watch MQ momentum. Okay, watch MQ momentum, because if we're slowing down, then what does that normally mean? If you're going to turn around in an intersection, you slow down to make that turn, right? If you are going to blow through that intersection, you're going to blow through with momentum. You're not going to, very rarely, you're going to sit here and peter around and then, okay, now I'll go. That's not going to, that doesn't usually happen, okay? Now, it doesn't mean it can't trend a little bit like this and then blow through, but you just got to be careful. I mean, really, if it does do that, you are now, you hit this level, you are short one. Okay, it doesn't matter if you go sideways for a long time, because you can either go do this or you can do this. It doesn't matter. You can either, go sideways for a while and then decide, or you can just go ahead and decide right off the bat. Okay? It doesn't matter because the limits are in place. It's based on price, not on time. On options, it's a little different. That's how we make money sometimes, but we can talk about that another time. How far from this support and resistance level? It depends. Okay, so the question is, how far do we put these limits away from this level here? That all depends on what you're trading. I've been in Thomas's trading room before, so just for his commodities, stuff like crude oil and gold, they respect these levels pretty well. They're usually pretty tight. Okay. Something like RBOB, which is unleaded gasoline that Thomas trades, they're further away because of the size of the contract. They tend to be a little bit more, lack of a better term, wobbly around support and resistance. The spreads are pretty wide. If you're doing this with options, you want to give yourself a little bit of leeway, because options are basically vehicles that we trade on stock price, and they tend to have a wider spread. So that's another thing you want to be careful of. So basically the trade is the same. The support and resistance, the distances which from support and resistance depends on what you're trading. So I mean, like anything, it's good to have a good understanding of what you're trading to do that. How do I handle false breakouts or breakdowns? Yeah, that you have to balance the distance between the limits and the support and resistance and those fake breakouts. There are some commodities I know that tend to try to knock out stops, and then before they reverse, they'll do that, and it's hard to tell. It just depends on the vehicle you're trading. Right. Okay. All right. Let's go do a couple of examples. I'm going to show you, and then I'm going to give you guys a chance to, if you guys don't mind, I'd like to talk about individual stocks, because that's what I trade in my options live trading room. So I'd like to stick with that. But if someone really has something they really want to request, just let me know. Okay. So let's just look at a couple of live stock examples. Bring up TradeStation here. Now, one thing, I won't be able to draw pretty pictures for you, so excuse me with that. Again, best ways to identify support and resistance trend lines is see it live. I'll demonstrate it here on TradeStation. Okay, let's first look at, this is the gold that I just showed you. The next one I want to look at is Amazon. I always go through it with my room with longer term. You see this wedge pattern, support and resistance levels on a weekly. Let me zoom in. Okay, just watch the crosshairs as I tap them. Here, you see that this point of inflection, prices come down, hit that level, come up. Okay, that's how I came up with that point. This one, where I started, prices came down, hit that point there, and bounced up. Okay, those 2 points I connected, and then created this trend line, and later on, lo and behold, when we broke these support levels, came down, we bounced right on that support and bounced straight up. It's almost like the prices are choreographed, but what's important, they're visible because of these well-defined points of inflection. Again, this is a weekly. Prices came down here, and then bounced up. Prices came down to here, bounced up. Now, this is maybe where some people get confused. Like, are these points of inflection here? Because the stock price did stop. technically they're not, because you see prices are kind of going sideways. This is a point of inflection. See the steepness of the V? That's a good point. This is a pretty good point. Here prices came up, they stopped, and then they started coming back down. Either of these 2 points would be a good point of inflection. I use the second one. Prices came up, they stopped, and then they reversed. So this is good here. And this is what is defining this pennant pattern here. Now, this is a good point of inflection. These are not. Again, because they're just, it's almost like you can see how they're coming down and hitting that support level, the trend line, excuse me. And then we break through it. And then here the next day, we come test this and move back up. Okay? That's weekly, Amazon on a weekly. Look at it with the same trend lines superimposed on a daily. Okay? These are the same trend lines, support levels, and Amazon right here, just like I showed you in Apple, hits this trend line, comes up. See right here? That's why I leave both trend lines and support levels in place. Prices come down, provides that nice support level, comes up, hits that level. See, this is a good point of inflection. Comes up, comes down. See how we stop on this bar right on the trend line and then start moving back up. Here we broke through this trend line. Support resistance level breaks through, but we do touch it here and here, and we even got close to it here. We break through. We actually stop on the support level for the day, the close. The next day we open right below it, come down, almost touch this ascending trend line, come back up. Here we break through, and as we're going back up, where do we stop? We actually stop on this descending trend line, and it's based back here, and well, I think, let's see, it's hard to tell where else it's based on, but it stops there. Now it does provide us another point of inflection, so we can draw the line based on it, and it comes back down. You can see how prices come up. Now again, I'm showing you how this is, you know, I remember this day when we broke through this support, this ascending trend line, prices just broke through, but they stopped right about here at 252. So right there, that's how you can use them to guide you. Again, this is a daily chart. Here on this day, we just came down, stopped on it, bounced right back up. Here today, when we broke through, we ran up for a bit, and we basically closed on this horizontal support resistance level. So anyway, that is Amazon. Apple, I already showed it to you. Show it to you again. But again, you can see how nicely it trades. Again, I draw it first on a weekly. You can see on a weekly how nicely it trades. Okay? So it's right there in the middle of that channel. The entire, since when did we break into it? Since late part of February. Apple is, if you think about Apple's going down, actually it's in this channel for the good part of 3 months now. It's just bouncing up and down to support and resistance levels. Okay, the next one I want to show you, and if you think of any stocks that you'd like me to go ahead and look at for you, go ahead and type them in now. Facebook is the last one I want to show you. Now Facebook is really cool. I think you'll like that. Okay, Facebook, remember it, the IPO, 45, I think is what it opened at, 43. It did this. Once it finally got over the shock of the fact that it was actually falling and didn't know how far down it would go, made this low on this day. This, again, this is a weekly. You see, there's a support and resistance level here and here. The question earlier was, when do we draw them initially? I normally look for, you know, a point of inflection, and then that's where I'll put one. Okay, here's a small point of inflection and significant lows and highs right here. This is actually a point of inflection here too, this red tip bar coming up. But what I wanted to show you specifically on Facebook, do you notice how there are different plateau levels in Facebook? So they're trading within this level, and then they break through to the upside. Then they trade in this level for a little bit, they break through to the upside. 4 weeks here, they break through to the downside. And in this whole time period, it's been in this middle section again. Now we just broke through last week. So Facebook could be on its way down to stay in this level. You can see that it's more pronounced if you look at a daily. Okay, it shows you how prices behave within certain support levels. So right here, they break up, they break down. See right here, I put the support level here based on the low on this day, and then it approached it here. See right up here, this support level is based on the high of this day. And if you look back, it's also based on this period of time back here and right here and generally right here with these highs. Okay, it's not going to be perfect, but it becomes, it becomes pretty good road signs in terms of trying to identify where stock's going to slow down, where they might turn, where they might break through. Okay. Okay, good. Thank you for those couple of suggestions. Let me see. And what I will do for you is basically Trimble navigation. Okay, this is exactly what I do in my options live trading room. When they give me a suggestion, I'll say, great, let's look at it on a weekly. I always start long term. Now, this is one question. I think someone was asking me about the steepness of a trend line, because you'll look at this motion right here and you'll say, can I draw the this support and resistance like this or like this? See how that's following the motion up? That's truly not a trend line. That's almost like a definition of a channel, even like this. Oops, I'm sorry. I meant to get the pencil. Okay, right here to right here. Okay, that is not exactly a trend line. This is almost like a channel, and it still has the behavior of kind of bouncing off of it like it does here and then moving up, but technically it's not a trend line. I'll show you a trend line. Let me remove these so I don't confuse anybody. See, this is a point of inflection right here. And going back here a little bit, this is the highest point in this move here. This is not as a good a point of inflection, but it's still reasonable. Here, that did not work out too well. There to here. Okay, that is a good trend line. See how we kind of stopped on this day right here, kind of came down, tested it right here on the next day, and the next day here, that day. See how the prices kind of stop and then they continue up. You see how I connected this point here and this point here? See the behavior of this long bar? Prices opened down here, they came straight up, they stopped on the trend line, and then they reversed and they closed right here. See that bar? I'll zoom in so you can see exactly what I mean. I can really zoom into this. See, start on this day. This is a weekly now. So can you imagine the energy required to stop just right there on that trend line? I would not be surprised if that's close to a nickel's within 5 cents of that line, if not closer. So this is what I mean, that those seem to be two good points, and you'll see that kind of behavior. If prices come down here, you see how it approached it. It wasn't perfect, but still, it provides you with some guidelines as to where the turning points may be. Okay, so that's Trimble on a weekly. Let's look on a daily if we have any. Again, if you wanted to draw out like a trend line that went down like this, you really don't want to do that. This is a legitimate turning point here, but I would probably connect this point here and then this point here. Not necessarily anything down here. This is a good point here. You can say this is a good support level here. See how prices behave. You see prices came down, they stopped, they turned. Prices came down, they got a little resistance, but they were able to break through. They came back up. When they came back up, where did they stop? Right on that level. Prices came back down, they broke back through. They're hovering around here, and then they broke back to the downside. Remember I drew this line? Okay. See how prices kind of got wedged in here. Now prices came down. Now they stopped on that trend line again. Okay, this is another good trend line. See this point back here? This point of inflection. See, we came back up. Where did we almost stop? Right there. You go all the way across. Okay, look, this is where we are. This is where we are today. This is where we are. Where was that? Mid-February 19th. Look where I drew it initially, based back here in September. Okay, but this is where we stopped. So if you're looking, if this is falling, you're saying where would a good stopping point be? Well, I'm going to look all the way back here in September and November. Those look like two good points, and that's exactly where prices slow down. So you need a lot of bars, but look for these nice sharp points of inflection. That will help you. Okay? And got one more. Don't want to hold you too long. NGL, because I know your time is very precious, and I appreciate you spending it with me. Wow. Okay. What is this? Noble Energy. Okay. See, I have the same problem right now with Google. See how this has been moving up and has been moving up strongly. On a weekly, let me just show you. This is what I do. If I just off the cuff, this is a high here, point of inflection. Okay. Watch. Comes up, comes back down. Where does it stop? Right there. Where's that? Where did I get this level? High, right here. Okay. Prices come up, break through, they come back down. Where do they stop? Right there, and then they bounce back up. Okay. And James, it's fine. As James is telling me, Noble Energy was actually going to split. The chart will be the same. The numbers will be different, and the trend lines will be the same. Okay. If we this is the same problem I have with Google. As prices move up, you don't have these points of inflection, so it becomes harder from the standpoint of drawing support and resistance levels. I look at the highs and the lows, and I will put some support and resistance levels there, because you'll see as Google, I mean, that's what I see on Noble Energy on the daily. Basically, it's the same thing. This is a nice point of inflection here. This one's a nice one here also. Do you see where I put it based on this date here? This bar? Look currently when it came down on, what's that, Friday. It's the low is basically the exact same point as the high here. Okay? You can also use this point here as a point of inflection here, and it kind of respects it here, but when prices, I put it based on the high here, prices came down, they came back up. Where do they stop when they come back up? Right there. Okay, so I mean, I'm trying to do this as a demonstration for you to show that these daily and weekly trend lines and support and resistance levels are important. You can do this on any charted stock, commodity, I guess Forex pair. Charts are all the same because the behavior is still the same. And use them to your advantage, because when we trade intraday stuff like Apple, let me just see if I have it. When we trade intraday, I'll usually use tick charts, but I will still have these support and resistance levels charted out, that if prices break through a level, I know where the next one is. I know where it's going to slow down. I have an idea where it might stop. I'm going to watch it for a reversal, and I will pair that with NQ momentum and watch how it approaches the support level. And you know, it makes a difference in your trading. And then you can utilize these same type of strategies that we just talked about back here with trading resistance breaks. You can do that, or if you don't want to necessarily go through, this works better, I think, in terms of futures and stocks. Options is it's a little harder because we have to watch the price of the underlying, but we trade actual options. So we just assume we'll go ahead and go long here with a call contract, and then if it does break through, we just have to sell the long and buy the put to write it down. So it's two steps as opposed to just canceling it, etc., and going short. Okay. Now, does anybody have any additional questions on what we talked about here? I've kept you for a little bit less than an hour. Does anybody have some last-minute questions for me? Hopefully I did a good job from the standpoint that I just want to stress, identify support and resistance levels. Anything that you trade personally or follow personally, you really should have daily and weekly support and resistance levels every day. Use them in your trading. It's like a roadmap, and you know where you might speed up, where you might slow down. And then thirdly, I gave you a couple of strategies to use to trade when you approach support, when you approach resistance, kind of what to look for. Again, you leverage that knowledge with watching the momentum, and that really provides some good clues, because again, I always think of a car. You're approaching the intersection, it's there on your map, you see it coming, and you decide, is the stock going to turn around? If it's going to turn around, the momentum is going to slow, then we could turn it, and then we go in the opposite direction. If I'm going to blow right through that intersection and I want to go straight, I accelerate and I go through it. So keep that visualization in mind. I think it will be a very good use for you in terms of your trading. So thank you very much for the nice comments. If you don't mind, now to answer your questions and gone through the examples, I just want to really quick touch on my Options Live Trading Room. Options Live Trading Rooms where we focus trading setups similar to what you've seen today, but other things also. Trading setups with options on stocks. The stocks that we normally follow are very familiar to you: Apple, Google, Amazon, Goldman Sachs, MasterCard, LinkedIn, Netflix, and the new one that we kind of picked up today is Tesla Motors. I think it's a cool concept as a company, but I like it better as a trading stock. So it's something more we've added just recently. Now, these stocks right here that I've outlined they're actively traded, but more importantly, they have weekly options that provide us good option liquidity, tight price spreads, and that allows us to trade intraday and then 1 to 3 day trading setups with ease. Normally what we utilize in our trading room is the directional puts and calls, and then later to the mid part of the week to the later part of the week, we actually have an additional focus of selling credit spreads, and that helps take advantage of time decay of these weekly expiring options. Our trading room hours are normally 9 a.m. to 1 p.m. The 30-minute difference between when we start and the opening of the market gives us some time to review, talk about opportunities, check up on current positions from the previous day's close, from the close of our trading room through the end of the close, and you know, and also we talk about economic reports if they may affect our trading. Normal price is $149 a month. Now, you know, if it sounds like the opportunities of trading options on stocks sounds exciting to you and profitable to you, and you'd like to hear more or experience more yourself, go ahead and send me an email at dave@microquant.com, and I can help you get a free pass to my Options Live Trading Room. I would like for you to come visit, to experience it, and you know, see the excitement. I do a lot of teaching also. I talk about opportunities. We always work through the trades, and I answer questions just like we do with the this webinar. So please, if you'd like to visit, please let me know. Send me an email. I'll get you all set up with a free pass on a day of your choosing. Be happy to have you. I know next week also we have an open house. I believe it's next Wednesday in the Options Live Trading Room, but this way, you send me an email, I'll be happy to set you up anytime that you want. Okay? All right. Well, again, thank you very much for spending time with us in this webinar session. I hope you found it informative and exciting. Any questions can be directed to support@microquant.com. Feel free to send me an email personally. Be happy to answer any questions, take care of any of your needs, set you up with a free pass to my options live trading room. Again, my name is Dave Aquino, and I'm just reminding you to keep your options open and your trades profitable. So thanks again. Have a good night.